I will give you an interesting statistic, Guy. Do you know that Zillow thinks that my house is 305 times more valuable than it was in 1930? So a lot of times, if you go look at Bureau of Labor trade statistics, they'll tell you that the dollar's lost 95% of its value over the last 80 years. But that's actually not true. The dollar's lost 99.7% of its value.
Michael Saylor is an American entrepreneur and the CEO and co-founder of MicroStrategy. Saylor is a billionaire Bitcoin bull who is heavily invested in the world's leading cryptocurrency. In a recent interview, Saylor talks about the economic and geopolitical situations that threaten fiat currencies and traditional investment assets such as bonds and equities. On the economic front, Saylor explains that many major fiat currencies are being inflated away faster than investors can make any real gains. Using the US dollar as an example, Saylor states that the currency is in much more trouble than the government agencies publish. He explains further that the Bureau of Labor Statistics informs the public that the dollar has lost 95% of its value over the past 80 years. According to Saylor, the reality is much darker than that, as the currency has lost 99.7% of its value. The businessman also estimates that the real inflation rate on assets is between 15 and 20%. On the geopolitical front, Saylor explains that the sanctions against Russia have made many investors realize just how unsafe it is to rely on their local fiat currencies to safeguard their wealth. Countries also risk having their assets seized if they hold them in another country's bank or credit derivatives. The result of both issues is a frantic search for a better way to store wealth, and that's where Bitcoin comes in handy. Let's hear from the billionaire CEOs, but before we do, please take a few seconds to click the like button and subscribe to the channel. Thanks, and enjoy the video.
Well, I think if we look at the macroeconomic environment, the inflation is and currency devaluation is the number one issue. And I will give you an interesting statistic, Guy. Do you know that Zillow thinks that my house is 305 times more valuable than it was in 1930? So a lot of times, if you go look at Bureau of Labor trade statistics, they'll tell you that the dollar's lost 95% of its value over the last 80 years. But that's actually not true. The dollar's lost 99.7% of its value if your benchmark was Miami Beach real estate or any scarce desirable asset. I bet the story's not that different for New York City or Hamptons real estate or Picasso's or the like. So inflation's an issue, and I figure the CPI is 8%, but the real inflation rate in assets is 15 to 20%. We know that all these currencies are weakening, right? Every Eastern European currency is weakening. The yen is weakening against the dollar. I mean, everybody is weakening, and the dollar is losing 20% of its value. So I think the macro environment says I got to find an inflation hedge. The political environment, on one hand, is a massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets, and we're going to embrace this. And I think a massive advertisement for Bitcoin with the Ukrainian-Russian war, and especially the sanctions, where we seized $300 billion worth of treasury assets from the Russians. I think the Chinese have $3 trillion worth of assets, and that might have got their attention. And probably pretty much the conclusion is, if you're any nation state in the world and you think you might ever be in conflict with another nation state, and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. So I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, A, and I don't trust my assets to not be seized, B, what am I going to do? And then right in the middle of that, you see things like Bitcoin poking their head up saying, check me out.
Saylor speaks further about the weakening fiat currencies and other macro issues that make it very paramount for investors to choose property. And not just any property, but one that is not under the control of any sovereign state, body, or organization.
Now that you're seeing our central bank, our Federal Reserve, and other central banks try to stem the tide, is it too late? Is the genie out of the bottle in terms of fiat currencies?
Yeah, I mean, I don't think anybody wants a strong currency. I think that the U.S. is weakening their currency. The yield curve is dead flat. guy. It was like 240 basis points for 1 or 2 year money and 240 basis points for 30-year money. And the irony is, in the face of that, where you've got 8% CPI, probably you've got 10 to 15% PPI, you've got 15 to 20% asset inflation, you've got a 2% long-term interest rate. In the face of that, you've got the Japanese holding 10-year money at 25 basis points, exercising yield curve controls, saying they will literally buy infinite bonds to hold the interest rate at 25 basis points. And the result is, lo and behold, surprise, surprise, the yen is weakening against the dollar. And then, of course, the mainstream media narrative is this is really great for Japanese manufacturers. Now, it's not a problem. There's no inflation. And you look at it and you say, well, it's pretty hopeless. You've got like, I would say $100 trillion of currency, $100 trillion of currency derivatives in the form of sovereign debt, and another $100 trillion worth of equities and commercial real estate that are value based on fiat cash flows. So that's $300 trillion worth of assets with a negative real yield of anywhere from minus 15% to minus 20%, properly understood. Improperly understood, the negative real yield is only minus 6 to 8%. Right? So that's your situation. If you're a rational investor, you have to stampede to property. And now the debate is just, what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto? You know, have you invented cold fusion, you know, in the next Tesla? And are you going to buy that? And so that's the investor attitude. I don't see there's no political conviction or will or any likelihood that we're going to stop the expansion of the money supply. I mean, no one's expecting that. No one's even talking about that. So that being the case, I think your real choice is just, do you want to be long property? Which property? And of course, my attitude would be, you should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like negative 15% real yield, but I even more like to be short the peso, which is probably a negative 35% real yield. So you want to be short a weak fiat currency via debt. And then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country. How valuable is $1 billion of real estate in Moscow right now, right, to anybody in the Western European region?
2022 has been an enlightening year for investors, and we are only 3 months in. First, Canada's Justin Trudeau seized the assets of protesting truckers. Then the sanctions against Russia, which resulted in the ruble losing almost half its value. Experts say that tougher times might be ahead for the currency as the West continues to announce a barrage of economic sanctions against the country. This means that investors relying on the currency have lost half of their wealth and could lose more if the attack on Ukraine continues. And the problem is not unique to Russian ruble alone. Many other fiat currencies are getting inflated away fast with almost no corresponding increase in wages. If you have not done so, you should re-examine your investment portfolio and choose the best way to position yourself without losing half of your wealth almost overnight. Thanks for watching the video. Remember to drop your comments below and hit the like button.